So cash flow. What is cash flow and why is it important? Well, cash flow is kind of what it says on the tin, really. It's the flow of cash through your business. In other words, the amount of money that you have going through your business at any one time. It's the kind of buffer of cash that you have in your business. And what happens naturally is you will have a flow of money coming in from customers and then going out to pay your bills. And what you need to make sure is that this flow, this balance, is an equal stream, or that the balance is building up. You never want to have more money going out than you have coming in, because what will happen is the pond will dry up and you'll run out of money eventually. So monitoring your cash flow is very important in order to make sure you don't run out of money. And this goes back to what we said at the start of the course about knowing your costs, knowing your overheads and things like that. That will really help you with your cash flow. But it's also about not letting things build up where someone owes you a lot of money or a lot of customers owe you a lot of money. For example, I've got a letting agent that I work for, which we do a lot of work for them. They give us a lot of business. But what happened at the start when we were starting working for them is that there was this sort of gap, because they give a 30-day payment terms. That's what they insist on. So there was a gap where for 30 days we didn't get any money from them, even though we did quite a lot of work. So you kind of get a gap in your cash flow in terms of income where you're doing a lot of work, you're still paying wages and things, you're paying your materials, but you don't get any money coming in. And if you don't have a buffer of cash in your account, then what can happen quickly is the cash dries up and you can end up getting stuck until that money starts to flow in from those jobs. So setting your payment terms as short as possible will really help you with your cash flow. But there are other things that will help as well. Taking deposits for larger jobs, that really helps when you get money in advance, which can help you to get through the job and pay the materials and still have enough cash in the bank. And just having a buffer when it comes to accounts like your wholesaler accounts, that can also help with cash flow, because what it means is that you're not paying up front for materials, but you have a bit of time to pay for those materials. And so again, you get the money coming in from your job and the money going out for your materials, and you don't have too much of an issue with cash flow. But the basic idea is that you always want to have more money flowing into the business than is flowing out at any one time, or at least equal. And that will mean that there is this buffer in the account. For example, if you've got £10,000 in your business account or £5,000 in your business account, that is your kind of cash flow buffer that will hopefully never dry up. If you've always got more coming in, then that amount is going to slowly increase over time. More coming in than going out, that amount will increase. Whereas if you've got more going out than coming in, eventually that amount in your account is going to decline and dwindle, and you're either going to have to go overdrawn, or if you've not got an overdraft, you're going to get a call from your bank manager, or it's probably an automated text message or something like that saying that you need to get some money in your account fast, otherwise you're going to be in big trouble. These are the kind of things that we have to deal with as business owners. But there are things that you can do to help with cash flow. So you could get an overdraft, for example, and that is a buffer in the negative sense. Most business accounts will offer you an overdraft if needed, and it just enables you that if you do get a little bit stuck for cash flow, that you can go into the overdraft if needed. Maybe a customer's just a few days late paying, and that will just help you and get you a bit more of a buffer and get you out of trouble for those few days. But in general, the best way to cope with cash flow and have good cash flow is just to have more cash coming into the account than is going out. And then you'll never have an issue with cash flow. And you can forecast your cash flow by monitoring your regular monthly expenses and when they go out, monitoring your regular monthly incomes as well. And you can put it all into a spreadsheet and balance it all out so you can see what your cash flow will be over time. Then you can copy and paste that into future months, and you should be able to forecast your cash flow so that you can see if your overall balance is going down in the business or going up. And you can adjust accordingly by cutting down expenses or raising prices or trying to do a bit more work to get a bit more money in. Never take cash flow for granted. That's what I would want to say in this lesson.